Hey everyone, and welcome back to another video for today. So over the past week, the couch investing portfolio was up 1.14%. I'm as surprised as you, whereas the S&P 500 was up a bit more, 1.74%. Year to date, it's still up 66.2%, whereas the S&P is up 13.36%. And since the start of the portfolio, it's up 165.38%, whereas the S&P 500 is up 33.74%. And so in today's video, I would first start to thank all the members, the new, the old, and the members that have rejoined more recently. I really appreciate all of your support. Now in today's video, we're going to go over the upcoming earnings week. Yes, earnings season is here and there are already quite big companies that are reporting their quarterly figures. We're going to talk about some market data as well, and then talk about some information that Oracle gave us over the last couple of days, some astonishing projections. And then I would like to touch a little bit more on some specific names, especially here MercadoLibre. And lastly here, of course, the probabilities of a rate cut in the upcoming Fed meeting. That's going to happen in about 10 days time. There's basically a 100% chance that we're getting another 25 basis point cut. Now, over the next couple of days, these are the big companies that are going to report their quarterly figures. On Monday, I don't really see that many big names, although we are seeing here one of the, names that popped up over the last couple of days, Zions Bank Corporation. Let's see what they are going to tell us on Monday. Then on Tuesday, we've got Coca-Cola before the market opens. Elevance Health could give us maybe a better indication on, the current state of the healthcare market, right? A lot of us do own United Health, Oscar Health, so that happens Tuesday before the market opens. We've got, of course, some other big names out there: Lockheed Martin, RTX, General Electric Aerospace, 3M, GM. Yes, it's as if they've all planned this. Then Tuesday, after the close, Netflix, Intuitive Surgical, Texas Instruments. That's about it from me. On Wednesday, before the market opens, you have Vertiv. That's also always an interesting one. That's before the open. After the close, we've got, of course, the big one, Tesla. You've got IBM. You've got SAP and Lam Research. Then on Thursday, before the open, you've got the likes of American Airlines, Honeywell, Hasbro, Southwest, T-Mobile. Thursday, after the close, we've got the one and the only Intel. I don't think the quarter is going to be an exceptional quarter, but all of the attention is definitely going to be on what gets mentioned during the earnings call. And who knows, maybe there will be a big announcement. Now, of course, all of the companies that do report before the open, we will be able to cover it during the live streams. And then all of the rest, there will be maybe specific videos being made about them throughout the week as well. Or who knows, maybe I might go live after hours. Then, apparently, according to Gavin Baker, the federal deficit is improving. He did ask Grok the question. Now, whether or not you believe this data is correct is up to you, but it does give us the sources right here, and it does seem like the federal deficit is improving. It is underreported. Moving on to something I missed last week. So the S&P 500, what happens with it after it falls 2.5%? While making an all-time high the day before. So again, this was a week ago, or actually now a bit more than a week ago. This was basically what has happened afterwards. Of course, a week later is basically the week that went by right now. On average, the market was up 0.19%. 50% of the time we were positive. Well, in this case, we were positive. Then the week after that, it's not that great. So the upcoming week, it's not that great, but it does get better from here. Then the S&P 500, after it closed 3 straight days below the 20-day moving average for the first time in over 80 days. And apologies, there is this flickering lamp here on top of my head. Maybe it's Morse code, who knows? But this is basically what has happened. 1 week later, 2 weeks, a month, 2 months, 3 months, 6 months, 9 months later to a year later. Again, the odds are definitely here in our favor. And then the last one here, what happened with the S&P 500 after the VIX jumps above 28 while the S&P is within negative 3% of an all-time high. Here as well, you can see that the odds are in our favor. Most of the time, if not all of the time, especially after 2 months later, we are green. And on average, we've been up quite a lot, right? If you look at, for example, 2 months later, on average, it's up 5%, 3 months, over 8.4%, then, well, we're basically double digits, 6 months, 9 months, and a year later. Quickly touching on the bull versus bear argument right now. This is what has happened historically, right? Historically, you can clearly see that we spent way more years in a bull market than in a bear one. Plus, you can clearly see that over the last couple of years, we've had a couple of bear markets, although they didn't really last that long, right? We've had worse back in the great financial crisis or the dot-com bubble. That one actually lasted 2.5 years, 47% drawdown. But we did have bear markets more recently. Just happens to be that, well, we recovered quite rapidly. But the point I'm trying to make here is that bull markets on average last 5.3 years and you go up 254%. Bear markets on average 1 year and you're down 31%. So here as well, the data suggests stay invested. Now, crude oil, as you can see, is now at its lowest price since March 2021. This, of course, can help with inflation, but on the flip side, this might also signal, well, a big reduction maybe in demand. Could this be the early signs of the economy entering a recession? Remains to be seen. Last thing here before jumping into the portfolio and then talking about Oracle, MercadoLibre, and some other things, I want to show you this again, right? I've given you examples and speeches before about why I believe that we are not the same space basically as the dot-com bubble, right? Because back then you've had a lot of ideas, you have a lot of money flowing into some names that weren't generating anything, right? The pets.com one was an idea that was worth a lot of money. But Nvidia is not pets.com, right? Nvidia is not pets.com, Microsoft is not pets.com or hospitals.com or whatnot. Today, we've talked about this last week. Brad Gerstner gave this great example of, dark fibers, right? Dark fiber, and now you have dark GPUs. No, you don't. Everyone is trying to get as many GPUs as fast as possible. If there is a GPU available, it will be used. It's not like companies like XAI, OpenAI, Google or whatever, Anthropic, Perplexity. It's not like they've got GPUs that are basically sitting still and nobody uses them. No, every GPU that you buy is going to get used. Also, something I told you before, 25 years ago, what exactly grew from close to 0 to almost 1 billion users in record time? Nothing. Nothing came close to it. So again, it's not the same. It's not the same at all. Today you're seeing AI companies or whatever you want to call them, tech companies go from 0 to 1 like this. One viral tweet, suddenly your startup has attracted 1 million users overnight. It's not something that could have happened before. Also today, you've got trillion-dollar companies that are extremely profitable that can finance these smaller startups. Yes, maybe some of these startups will not make it, but it doesn't put extra risk, a little bit, but not risk that will make an Nvidia blow up or something like that. No, they've got enough cash to play around. So again, I wanted to show you this because this basically shows you that we are in a very, very different era than the dot-com era. Now, quickly touching on the portfolio, I did add to 2 positions. You get 3 seconds to guess which one it is. You can write it in the comment section below. 1, 2, 3. Okay, if you guessed correct, it is SoFi and it is Nebius. You might think, well, are you crazy? Why are you adding? It's already such a big position for you. Well, again, I don't care. These are 2 excellent companies and I'll accumulate more shares as I see fit. Now you might say, but why aren't you buying more Rubrik and Oscar and Shift4? Well, luckily I have the cash to do it. Someone thinks I should make a t-shirt. Time and cash is all I need. Exactly. I've been adding to Rubric and Shift4, to Oscar as well, as you can clearly see right here. I've been adding to those names and I'll continue to add to those names opportunistically. But yes, when I saw Nebius come back down to around $113, $112, I bought a little bit more. Same with SoFi. We're back here in this $26 or so. We're very close to the earnings report. I'll actually make a prediction video yet again. I think on Monday that should come out. I am extremely bullish on those names, and so if I like the price that I'm paying, I'll just buy more and more. Same could happen here with a Google, same could happen here with a dLocal, with an AMD, with all the rest. The portfolio has been performing quite well, although yes, over the last couple of days, some of these names have taken a hit. Now, talking about the biggest hit that I took this week is actually not from the names right here, which makes sense, but it's actually from the options play. And that's just the risk of, well, buying options. When things go up, you go up significantly faster. But when things don't move or are down, well, you go down quite rapidly. And that's exactly what has happened over the past week. Enphase, okay, Enphase is still down, but that's still very, very small. But Pagaya, I've got two positions, although I don't think it's that risky. Yes, I'm down quite significantly on both of them, but one of them is here January 26, but $30 price, strike price that is. I don't think that's such a big risk because I do think that this is a great company that has been pulled down because of some macro related issues. But I do think that the next or the upcoming earnings report will prove yet again that this is a great company that is growing quite quickly and also becoming more profitable. Yes, it's a bigger risk because it's for January 2026. Then PayPal, we've got here also a very, very small position for January 26. Strike price $100. We're still in the green, but of course we were way greener a week or 2 weeks or so ago. Same here with the March one. All of them, of course, strike price $100. $100 strike price also for June 2026. We're still doing well right there. And then January 27, I do have $120 strike price that's still up significantly. And then I have also a $90 strike price. That's a bit newer one, $90 again, a bit less risky in my opinion, maybe less upside as well. But hey, it's no point in being that greedy. I do still think that all of them will perform well. Maybe Pagaya is a bit more on the riskier side because I'm only giving them 1 quarter. I will, of course, make a prediction video for PayPal, what I'm looking for in the upcoming earnings report. Then as for CoreWeave, still hold my 204 shares at $96. That's my average. And Iron, of course, I still have 500 shares after I took profits last week of the other 500 shares. And yes, all of the cash is basically still sitting there. Well, a bit less now that I did add a little bit to these option plays right here. BMNR, I still have a position as well. The position will pop up right now on the screen. Now, quickly touching on MercadoLibre. MercadoLibre is a position I own in my retirement portfolio with Meta, Amazon, MercadoLibre, Tesla, and a little bit more of Google. Yes, I do plan on adding a little bit more to MercadoLibre and Amazon before they report their quarterly figures. Now, MercadoLibre is an excellent company. If you've been following the channel for quite a long time, you know that I've been bullish on MercadoLibre for a long time. This is a company worth $110 billion. Yes, one share will cost you $2,000. When will they split? I don't know. But over the past 5 years, yes, of course, this includes the bear market that we've had in 2022. Over the past 5 years, you can see how many times this stock has had a drawdown of 20%, 15%. Multiple times. But what we've also seen is time and time again, this is a company that performs very, very well. Revenue-wise, over the last 3 years, has grown at a compound annual growth rate close to 40%. It's expected to continue to grow 31% compounded over the next 2 years. Looking at EPS, 32, close to 33% compounded growth for the next 2 years. Margin-wise, we're looking very good here as well. The current fears around the Argentinian economy and the increased competition of Amazon is one of the reasons why we're seeing this drop a little bit. Maybe you might say that, yeah, but maybe Mercado Pago, maybe the loan portfolio is also at risk right now because of what we've seen in the United States. Yes, maybe that's the narrative currently. But I think that the next earnings report will prove yet again that this is an excellent company with excellent execution. And actually, if we look at this, for example, app traffic, monthly active users. This metric measures the average number of active users per month. SimilarWeb defines an active user as a device having one or more foreground sessions within an app in a specific period. Look at this. Number one here, clearly, MercadoLibre. Then you've got Amazon, but Amazon has been flat for quite a while MercadoLibre has seen a steady rise. Temu grew very, very quickly, but more recently it has come down. Shein, AliExpress, all of them, right? The fears, super competitive. Well, clearly not. Clearly MercadoLibre is doing something quite good. Then, app engagement, daily to monthly active user ratio. Who's number one here? MercadoLibre. Yes, you've got Amazon, number two, then AliExpress, Shein, Liverpool, Temu, Walmart de Mexico, and Couple. Again, clearly, MercadoLibre is the leader. They've been leading this space and this continent actually for many, many years. Right? It's not new. These competitors are not new. The economic struggles in the regions are not new. Back in, I think, 2014, 2015 in Brazil, when Dilma Rousseff was president, right? Brazil was in a very, very bad place. Did that cause MercadoLibre to go bankrupt? No. They survived and they became much bigger. They became more profitable over time because that's what great companies do. If I actually show you here MercadoLibre, the chart on a weekly, you can see that the uptrend line that started here back in June 2022 has always been respected, has always seen the stock rebound. Yeah, now if we want to see a rebound, it still has to drop another $60 or so. Yes, we are here under the 50-day moving average. We're not oversold on the weekly. Maybe it can drop a little bit more, but it has respected that uptrend line for the last 3 years. And so to me, and I've seen many comments on MercadoLibre, yes, to me, MercadoLibre is a worthy company picking up before they report earnings. You don't have to go all in, right? You don't have to go all in because we don't know how the markets will react. But if you liked this stock, or if you like this stock at these prices, yes, the stock coming down a little bit more recently should not scare you from buying this amazing company. Lastly, here we've got Oracle. Oracle that came out with quite some information last week. This is a couple of pictures from Patrick Moorhead on X. Previously worked at AMD. Now he's a full-time analyst that talks AI semiconductors. So slide number one, or maybe I should start with this slide right here. AI infrastructure delivery example. So each year you generate $10 billion in revenue. 33% of the total cost is land, data center, and power. 65% of total cost is compute, network, and storage. So $60 billion in revenue, $39 billion in cost, brings you here a gross margin of 35% and gross profit of $21 billion. Now, working together to accelerate the AI build-outs, right? So the Oracle we've seen, they've got a lot of debt. You don't really know how they can sustain all of these future projects, but okay, these are the companies that they're working with. You see the likes of NVIDIA, AMD, Arista as hardware, then Capital, Silver Lake, Digital Bridge, Blue Owl. So they work with various partners and some others out there as well to make it all work. Then, two things. One, the Oracle Applications Suite advantage. We've talked about a lot of players out there, but the real winners are the ones that will have either a lot of apps built on their stack, or of course they own everything. They're vertically integrated, going to have the best margins. You will be able to offer the best prices. In this case here with Oracle, they've got here quite a lot of things. AI assistants, AI agents, teams, workflow agents, Fusion Industry, data intelligence, Oracle Cloud Infrastructure. You've got the AI database plus the AI data platform, and then of course the infrastructure as well. And they're working with, let's call it, all of the biggest and most famous AI models. Privacy, of course, your data, private data is of extreme importance here. Now, when you look at their own estimated goals and targets here, they go from the Oracle Cloud generating $10 billion in fiscal year 25 to $166 billion in fiscal 30, right? In fiscal 2030, that's 75% 5-year CAGR. It's insane. It's insane when you think about it. Right now, consensus numbers are $198.4 billion for fiscal year 2030 for the whole business. Oracle's target is $225 billion. They go from $67 billion in fiscal year 26 to close to, let's call it, $200 billion in fiscal year 2030. EPS expected to grow from $6 and let's call it 82 cents to closer to $20 in EPS by fiscal 30. If this happens, and if these numbers are, let's call it, realistic, right? Because we know, okay, RPO is $500 million, RPO is $500 billion. Again, it doesn't mean that it is contracted revenue or anything, but if these numbers are real, then Oracle today is cheap. If these numbers are real, of course. And that's the thing. They can be real. I think the answer will be clearer 2 years from now, when a lot of the infrastructure build out will be, let's call it, behind us. Not everything, but at least right now we are still in year 3. 3 years ago, ChatGPT got launched. Of course, the first couple of quarters, everything was chaos, right? Supply chain wasn't ready, etc., etc. So I would say we're 2 years into this huge build out. CapEx has started to increase quite a lot 2 years ago. CapEx is still increasing. Huge amounts of money is still flowing into all of these projects, which of course is helping a lot of the blue collar workers, right? Everyone in construction is getting quite a lot of money right now because, well, you need to build data centers, right? You need to build a lot of data centers, electricity, pipelines, you name it, right? It's a lot of work. It's helping, yes, a certain part of the population, of the economy that maybe previously did not get quite a lot of attention. So that should also help GDP. Yes, this whole AI story is one of the main reasons why GDP has been growing faster than expected. But so what? It's a good thing. And so, to me, to conclude, I like my portfolio. I'd love to grow other positions out there. Yes, you're going to say, you see, you should have already taken profits or trimmed down a Duolingo when you were basically break even. Yeah, okay, I missed that opportunity. Fine, but I'm okay. I still like Duolingo quite a lot, so I'm not that angry. But yes, I will eventually reduce the exposure or the dollar amount I have put in Duolingo. For those that are new here, my first buy in Duolingo was too big, right? It's a mistake. Okay, we learn from mistakes. Big deal. But as for the rest here, I still like so many companies here at the prices that we are getting right now. Yes, we are in earnings season, so we do expect some volatility. But yes, I am going to continue to add to the Oscars, to the Rubrik, to Shift4, to the Local, to SoFi, to Nebius, and yes, some others out there as well. If I like the performance, I like the results, and maybe the markets, who knows, maybe the markets will get us more opportunities or give us more opportunities in the coming days and weeks. So it is over, ladies and gentlemen, until it is not, right? Until it is not, the end is not near, although many headlines might tell you that it is. History has told us that we spent way more years in bull markets than we do in bear markets, and that's all you need to know. Unless, of course, there is a worldwide issue and we're at war with everyone and Manchester United keeps winning games. I mean, then yes, then maybe there might be an issue. But until then, invest in great companies. Don't panic on red days. Although if you do feel like you're going to panic, there will probably be a therapy session video available for you on the channel. Anyways, that's all I've got for you today. Hopefully you'll enjoy it. See you all in the next one. Bye-bye.